Welcome to our weekly Forex Market Focus video. Let's go ahead and take a look at some of the trading activity for the first full week of September 2013. This is a weekly chart of the US dollar's activity index. We can see here that the US dollar became quite weak this past week, mostly on Friday on account of the weaker than expected US August non-farm payrolls report. In this coming week, on Friday, we're going to receive retail sales data and University of Michigan consumer sentiment data. The euro was also quite weak this past week. In fact, it reached its lowest levels since February of this year. And before that, we have to go back to July 2012 to see when the euro's move lower in a single week was as acute as it was this past week. During this coming week, we're going to see some German CPI numbers, some Eurozone industrial production data, and also the European Central Bank's monthly report. One reason for the euro's continued weakness is the softness at the European Central Bank. They've made it quite clear that they have no intention of raising interest rates anytime soon. This is our weekly chart of the Japanese yen's performance and activity. We can see the move lower in the Japanese yen was as acute as it's been since July of this year. Prior to that, we need to go back to April to see a time period when the yen was as weak as we saw. During this coming week, we will see Japanese GDP numbers and we'll receive Bank of Japan meeting minutes from the most recent policy board meeting at the BOJ. This is a weekly chart of the British pound. The British pound, as many of us will remember, has been quite strong recently. But in this past week, the pound actually moved lower, showing some signs of falling back to earth. In the UK this week, we'll be mostly focused on jobless numbers. This past week, Bank of England, of course, voted to keep interest rates unchanged. And in August, Bank of England noted that it will link any future interest rate increases and hikes to a move lower in the unemployment rate to around the 7.0% level. Therefore, jobless numbers and claimant count data have taken on added significance in the UK economy for traders. This is a weekly chart of the Swiss franc's activity for the past week. We can see that the franc's move lower across the board reached levels it has not seen since April of this year. And prior to that, we need to move all the way back to January 2013 and July 2012 to see a move as strong lower in the Swiss franc as we've seen here. In the coming week, we will focus on retail sales data and unemployment numbers in the Swiss economy. This is a weekly chart of the Australian dollar's performance and activity. We can see there was a significant move higher here in the Australian dollar. In fact, this was the strongest single move higher since December 2011. That's almost 2 years ago. There are two principal reasons why the Australian dollar has been quite strong this past week. First, Reserve Bank of Australia voted to keep interest rates unchanged, and they did not provide any sort of indication that they will be moving to reduce interest rates in the future. Second, there was an election at the end of the week, and there was a change in presidential premiership office in Australia. Tony Abbott, who's from the centre-right coalition, displaced Prime Minister Rudd. Abbott is expected to pursue stronger pro-growth business policies and to abolish the controversial mining tax. Therefore, the Australian dollar moved higher. During this week, we'll see home loans data, retail sales data, industrial production data, and employment data. Of course, we'll also be watching many Chinese data that will be released this week, including money supply data and new loans data. This is a weekly chart of the Canadian dollar activity for this past week. We can see the strength in the Canadian dollar has not been seen since July of this year. It was a nice reprieve for the Canadian dollar, which has been significantly underwater for the past several weeks. In Canada this week, we await housing data and house prices data. Finally, in New Zealand, the big news of the week will be the Reserve Bank of New Zealand interest rate decision. We can see here by this huge move higher in weekly activity for the New Zealand dollar that it has not been this strong since December 2011. We anticipate that if continued strength will take place in the New Zealand dollar, it will probably be stimulated by the interest rate decision RBNZ this week. Let's go ahead, based on our research, and take a look at some of the major currency pairs and cross rates that we'll be following this week. This is a daily chart of the US dollar against the Canadian dollar. We can see last week that the US dollar for quite some time has been supported at this key 104.67 retracement level. And then after Friday's disappointing US jobs data were released, the US dollar came off significantly down to this 1.0380 level and then moved higher, as indicated by this blue up arrow. Any additional weakness in the US dollar Canadian dollar pair will likely see a move down and a test of this 103.10 level. Let's also keep in mind that we have a significant trend line coming in here as indicated in yellow. This is a daily chart of the Euro-Australian dollar cross rate. We can see that the pair continues to hover around this 143.66 key level and is far below moving averages up here. This past week, it came close to testing key support at 142.21, as indicated by this blue up arrow. A move lower, and we would expect test of technical support down around this 139.55 area. This is a daily chart of the Canadian dollar Swiss franc cross rate. We can see that on Friday, the pair moved above this yellow downtrend line and briefly traded above this resistance level that comes in at 90.50, as indicated by this blue down arrow, and then moved sharply lower. If the Canadian dollar is able to continue its move higher, we would expect that it would try to test the 91.29 area as indicated by this red resistance line here. Our next chart is a daily chart of the British pound against the New Zealand dollar. As we can see, the British pound gained a lot of ground this year against the New Zealand dollar, but in recent sessions it has moved lower, crossing below these moving averages and testing key technical support around the 195.16 area. In fact, on Friday, it closed below this area as indicated by this blue up arrow. We have an up trend line coming in as indicated in yellow, and any further weakness in the British pound on this cross rate, we would expect a test of the 191.70 area, followed by a test of the 188.90 level as indicated by this red retracement line here. This is a chart of the Euro-Canada daily cross rate. We can see the euro has been quite weak against the Canadian dollar and has been falling for the past several trading days. On Friday, we can see the euro took out key technical support at two different levels. The first level was this 137.30 area, and the second level was this 136.92 area. In fact, the euro weakened so much that it tested this key 136.37 support area and then moved higher. Any further weakness we would expect would result in a test of this 135.90 support area and possibly going down to 135.22. The final cross rate we're going to look at this week is the Australian dollar Japanese yen. This is a daily chart of that cross rate. We can see a down trend line coming in not too far from where we traded on Wednesday, Thursday, and Friday of this past week. We can see that the pair continues to orbit this technical level, which comes in around 90.88. If we're going to move higher, we're going to need to break above this yellow downtrend line. If the Australian dollar consolidates recent gains, we would expect a test of the 90.35 level, followed by a possible test of the 89.60 area. We thank you very much for watching our video.